B bracket. So the tax bracket went up. Every year they go up, but this year went a little bit more up. Just for you to be aware, because of COVID, some people, the tax table were adjusted where people can have more money bringing home, but that means that they pay less, they will withhold less income tax for them. And when they come and pay taxes, they're surprised that the refund is not the same, or that they have to pay more, is because the tax bracket went up, like everything is going up. Factors that we have for 2021. For rebate credit, you didn't get the stimulus payment, the last one that they sent for $1,400 per person, you can get it now in your taxes. But now, again, make sure that you didn't receive it, because we have many issues. Taxpayers say they didn't remember, or because it went directly into their account, and they even forgot that they got it. So they told us that they didn't receive it, and it was added to their taxes. And what happened? The IRS hold those tax returns, so now it will take longer for you to get your refund. So make sure in your records, check your record that you did not get this stimulus payment, so you can claim it in your taxes. Unemployment tax. As you know, the American Rescue Plan Act eliminate a portion of the unemployment last year, and $200 that was eliminated per person. So the people does not have to pay taxes on this first $10,200 that they get of unemployment. Or if they get less than that, unemployment was not taxable for until that amount. If they got over that amount, of course, it was taxable. What happened was that IRS made these changes in the middle of the tax season. So many of the tax return was filed already, and they notified to the tax preparer that they would take care of sending to the people the difference of that exclusion. Some people receive it, some people got some checks and they don't know where they come from. For many of them come from that unemployment. But if you do not receive that unemployment by the beginning of next year, we can process for you an amendment of the 2020 returns, so you can claim it back. That is your right to get it. But this year, 2021, there's no exclusion for the unemployment. You have to pay taxes in all the money that you get. Another good thing, I think, for the premium tax credit, the premium tax credit is the credit that we get for health insurance when we get insurance through the marketplace. So if we make more money, we get penalized. If we make less money, we get a credit, and that's the premium tax credit. This year, they increased the limit so more people can benefit from this credit. It's zero responsibility, that means no penalty. If your income was below 150% of the federal poverty line. So just to give you an example, 150% of a family of 150% of the poverty level of a family of 4 is like $39,200. You don't make that amount and you got the marketplace insurance, you would not have to pay any penalty, and probably you have a premium tax credit added to your refund. So that's good, because this is a credit that is refundable too. Aside for the coronavirus or COVID-19, last year, if you get a distribution due to the coronavirus, you have the opportunity to split the income that you get in 3 years, and also the penalty was eliminated, and that was so good for many people. However, this year, for 2021, coronavirus is not considered a disaster. So it's not considered a disaster for this distribution. However, if you live in a place that it was assigned as a disaster area by FEMA, by the federal government, you can still get this benefit that do not have the penalty, and you can split it in 3 years. But again, for coronavirus, is not applicable. Another credit is called the Savers Credit. This year they increase it so you can get up to 50% of whatever you contribute to an IRA or to their 401k. the maximum credit would be $1,000 per person. That means, based on your income again, I'm showing there the limit of the income. You can get up to 50% if your income, like Mary filing joint, does not exceed $39,500. You can get 50% if you contribute $1,000. You can get up to $1,000 credit. If you're married filing joint, that means a $2,000 credit for the saver's retirement income. And again, this is the contribution that you do either through your job or you just have an IRA or Roth IRA. I'm talking about the Roth IRA. The maximum amount that you can contribute in a Roth IRA is $6,000, or $7,000 if you're over 50 years old, based on the taxpayer income. You can download frequent asked questions at taxpreparationorlando.com/free, so you can get more information about what we're talking about tonight or any other questions that you have.